The S&P did an upwards breakout from this descending channel for the first time since January 2022 when the bear market started. In addition, it is on the verge of flashing a golden cross indicating that this bear market is over. Technically speaking, the S&P is about to reverse the bearish sentiment. Is that correct? Well, we'll see in this video. Welcome to the Finance Hydra channel. My name is Nathan. It is a pleasure to meet you guys over here. Let's start our study on the S&P index. Yes, we are breaking this descending channel upwards. This is quite bullish. However, the situation is still slightly risky. It is not extremely risky, but it is slightly risky. According to All Brooks, 80% of the breakouts are false. And as far as I know, the S&P could easily do this, right? It did a higher bottom, and then if we see a top sign under the 4100, this key point over here, this resistance level, then the S&P could easily trigger a double top chart pattern and seek lower levels. This is a real possibility. This is a false breakout is exactly what happened over here, right? I mean, we did a lower high, lower low. We did a downwards breakout from this descending channel, and in the next week, we did a fantastic reaction just to get inside the channel again. So, as far as I know, this could be easily a false breakout. However, what's the problem with this thesis? The problem is that we don't see any meaningful bearish reaction on the S&P so far. If we see a top sign in the daily chart, if we see crystal clear bearish reversal structure, which we don't right now at this moment, yes, the idea of the S&P doing a double top chart pattern over here gets real. However, as long as we stay doing higher highs, higher lows, trading above its support levels like the 40-50 over here, like the 21 EMA in the daily chart, then the S&P is not going to reverse the bullish sentiment in the midterm, and it will probably reverse the bearish sentiment in the long term, in the weekly chart as well. So this is what you gotta see if you are bearish. Let's say you believe that the S&P has to drop. I mean, there are too many bad catalysts out there, and the S&P has to drop somehow, right? Well, you gotta wait for a crystal clear bearish reaction under the 4100. If the S&P breaks the 4100, then it is going to trigger a bullish reversal structure. It is going to trigger a bullish pivot point, doing a higher high, higher low for the first time since this bear market started. So this is going to be a very, very strong bullish reversal sign. All right, a higher high, higher low in the weekly chart, it is going to be a very strong bullish reversal sign. I know you may say that, oh Nathan, but the volume is still quite low. Yes, you're right. This is why I'm still considering the possibility of a double top chart pattern over here, right? It is the only reason why I am considering this idea. However, as long as we don't see confirmation, as long as we don't see any crystal clear bearish reversal structure, there is absolutely nothing we can do about it. All right, remember, my dear friends, trading is reactive. It is not predictive. And of course, if you want to join the top 5% of traders that can actually make money while beating this market, join our family. Check my website. The link is in the description of this video. So far, this year, we are doing insanely well. January this year just started and we are doing amazing well. We achieved amazing returns this month. Seriously, consider subscribing, check my website. Now, here the situation gets interesting, really, really interesting. If we take a look at the monthly chart, the S&P found a crystal clear support level above the 38.2% Fibonacci's retracement, okay? The first retracement over here is working as a support level for us in the monthly chart. If we lose the 38.2% retracement, then this might be the beginning of another crash. If, again, in my humble opinion, as a retail trader, just like you, just like everybody else over here, in my humble opinion, we gotta lose the first retracement in order to trigger a long-term crash, a long-term sell-off. In addition, the 38.2 is quite close to this support level over here, around 37, 71, 73 over here. It is quite close to this black line in the weekly chart as well, which reinforces our thesis of a double top chart pattern. In this scenario, if the S&P actually reverses the bullish sentiment in the midterm, frustrating this bullish reversal attempt in the long term, then the next technical target is the 61.8% Fibonacci's retracement at 3,200. If it reverses, if we break the 4,100, then the bear trend will reverse and then the S&P will just seek higher levels. The next technical resistance will be the 4,300. So these are the key points you must watch carefully, especially the 4,100. And of course, if you are not my subscriber yet, we have been together over here for roughly 6 minutes right now. So if you are not my subscriber, consider subscribing. You probably like it, the content so far. Click on the like button to support me. And of course, I'm gonna keep you guys updated every single day on this channel. I really appreciate your support, my dear friends. See you guys next week. Have a great weekend.